Yeah. I think
Yes, sir.
This meeting is being recorded.
it is a pleasure for me to introduce CS Dr. Alok Garg. Alok, at very early age, has got various degrees, which include CA, Chartered Accountant. He has cleared Chartered Accountant. His company credit diploma in IFRS from UK, certificate course of INDES, and certificate course on BRSR. He has authored 4 books on accounting standards and Schedule 3. He qualified as a chartered accountant in 2007 and completed immediately in the next year, 2008. And he has completed his diploma in IFRS from ACCA London. And after that, he started his professional journey. And during his journey, he has, at very early age, he has already authored 4 books on accountancy, and which includes very current topic which is in vogue, which is treatise in Schedule 3, a guide for preparation of financial statements. Also, he has authored a treatise on INDES, explained with practical examples and MCQ. About this, I want to share my view. The view is that the articles who are under me, who are appearing for final CA, has are regularly referred his book on treatise on INDES, and it is very nicely he has explained the complexities of INDES in his book on INDES. Then he has co-authored a book on treatise on leases, co-authored on comprehensive book on INDES, which is on insight on Indian accounting standards, which is published by eminent publisher Walter Coors. He has developed material on INDES for CA final under new scheme, which I have just now referred. Also, he has reviewed Bhutanese accounting standard drafted for Bhutan by ICI, and various numerous articles on IFRS and INDES in the newsletters and magazines of IFRS. He has, by this time, he has conducted more than 700 lectures, including certain lectures in Dubai and Nepal and various universities on the accounting. Also, he is awarded with National Education Leadership Award. He is a visiting faculty of ICI for certificate course on INDES. Also, he is part of board of studies of ICI, accounting standard boards of ICI. With this, if I continue with his introduction, it will take another 10 minutes. So I don't want to waste his time and your time on his introduction. And I request Alok to take over the stage to deliver and enhance us and enrich us with the knowledge on amendments to Schedule 3, which is very important topic when we are now going for company audit. We have already completed our IT returns for individuals and partnership firms where tax audits were not there. Now we will start our season for the company audits, and we all should be well versed with the new amendment in Schedule 3, which are very important. So I request Alok to take the stage. Alok, platform is yours.
Yeah. So thanks, Nilesh bhai, for the nice introduction, and thanks WIRC of ICAI for again giving me the opportunity to deliberate my views on treatise on Schedule 3. So first of all, I would like to thank each one of you who have joined in this long weekend, and I can see on the screen. So there are very less number of participants, and I understand that it's a long weekend, and most of you who have not joined is enjoying their leaves. So I would like each one of you to, because we are in a very small group today, so I request each one of you that please make this session interactive, right? So that it's not about you, that you will learn from me. Of course, I would be able to learn from you as well, right? So this is kind of thing which I always believe, that it should not be a one-side communication, it should be a two-side communication, because I'm still a learner, right? In the sense, so I have a total experience of 15 years when I qualified as a chartered accountant, and I have a total experience of 7-8 years when I started deliberating on accounting standard, Ind AS, Schedule 3, CARO, etc., etc. But I'm still learning, right? So first of all, I would like to understand that how many schedule 3 is there, how many divisions on schedule 3 is there. So today's session is on schedule 3. So can anyone tell me how many divisions to schedule 3 is there? Khushbu is saying 3. What about others? Are all agree with her? Or few of you have some disconnect? Or few of you believe that there are 1 schedule 3, 2 schedule 3, 4 schedule 3? Amay is saying yes, it is 3. Okay. Yes, there are 3 schedule 3. When I say 3 schedule 3, there are 3 divisions to schedule 3, right? So if I talk about the journey on schedule 3, so prior to schedule 3, I'll not take Caro in this session. I'll talk about schedule 3. So if I go back to the journey of schedule 3 is something which covers the format of financial statement. Am I right? And when I'm talking about schedule 3, I'm talking about the format of financial statement for companies. I believe this is clear to everyone. We are not talking about the financial statement format for non-corporate entities. We are talking about the financial statement format for corporate entities. Yeah, I believe everyone is on same page. Okay. So when I'm talking about schedule 3, it provides a format for financial statement. But when I talk about the background and history of schedule 3, so this history or this format of financial statement started with schedule 6, right? And in February 2011, right, when this IND AAS were notified, so there was a big challenge for aligning the format of financial statement with the global format. And in old schedule 6, there was no bifurcation on current and non-current. There was nothing called as current and non-current bifurcation or segmentation in the format of balance sheet. So with effect from 1st April 2011, this schedule 6 got revised and it became revised schedule 6, and revised schedule 6 was applicable from 1st April 2011, right? And the larger change was the current and non-current classification was made mandatory, right? So after that, you know, the India INC is talking about taking IND AAS in their bucket, right? Aligning their format of financial statement, moving towards international standards, right? Which is IFRS. So the need for this is to also evolve our Companies Act, right? So earlier we had a Companies Act 1956, which was a very old Companies Act. And there was a need to change this Companies Act, right? And with this objective, Companies Act 2013 was notified. And can you tell me from when this Companies Act 2013 was applicable? Anyone? So let's take the benefit and opportunity of being into a small group of participants. Let's make this session interactive. Yeah. Any guess? I believe my voice is audible to everyone. Nilesh Bhai or anyone from WIRC can please confirm. I believe my voice is audible to everyone. Can you please confirm? Okay. Yeah. So from when this Companies Act 2013 was made applicable? So it was applicable from 1st April 2014, right? Companies Act 2013 was applicable from 1st April 2014, and on 26th March 2014, so 26th March 2014, Schedule 3 was notified under Companies Act, right? Schedule 3 was notified under Companies Act. Okay. And this Schedule 3 was applicable from 1st April 2014. And till that time, there was only one set of accounting standard in India, right? And how many set of accounting standard are prevailing in India as of now? How many set of accounting standards are prevailing in India as of now? Yeah. How many set of accounting standards are prevailing in India as of now? There are 3 set of accounting standard. But if I talk about companies, there are 2 set of accounting standard. One set of accounting standard is old accounting standard, right? Which are notified under Companies Accounting Standard Rules 2006. Am I right? Am I right? Old accounting standard, which are notified under Companies Accounting Standard Rules 2006. When you are preparing a financial statement under Companies Act, right, and you are following accounting standards, so how many of you are writing that under the basis of preparation para that the financial statement of this company have been prepared and presented as per accounting standard, which are notified under Companies AAS Rules 2006? How many of you are writing this fact? I'm talking about accounting standard. I'm not talking about IND AS. Yeah. How many of you are writing this para? Okay. Khushbu is saying yes, we are writing. So Khushbu, are you writing accounting standard notified under Companies AAS Rules 2006? Right? So let me tell you that is wrong. So this Companies Accounting Standard Rules 2006 has been replaced with Companies Accounting Standard Rules 2021. Right? So if you are writing, or if your client is writing that the financial statement have been prepared as per companies, as per accounting standard notified under Companies AAS Rules 2006, that is wrong. It should be Companies Accounting Standard Rules 2021. There is no 2006 as of now. There is 2021. Right? So one set of accounting standard is old accounting standard, which are notified, of course, under old regime, Companies AAS Rules 2006. But under new regime, it is Companies Accounting Standard Rules 2021, which is applicable from this year, right? 21-22. Now talking to IND AS, the second set of accounting standard is Indian Accounting Standard, which have been notified on 16 February 2015 under Companies IND AS Rules 2015. Under Companies IND AS Rules 2015. Okay. Now the thing is, if there are two set of accounting standard which is prevailing as of now for the companies, and the third one is accounting standard applicable for non-corporate entities, I'm not talking about that, right? I'm talking about for companies. So we have two accounting standard for companies, and you all have said that there are three divisions to Schedule 3, right? So now on 26 March 2014, there was a division, there was a Schedule 3 which was notified, and it was applicable for companies, because till that point of time only accounting standard were there. In 2015, on 16 February 2015, IND AS were notified. When IND AS were notified, at that point of time, Indian accounting standard are extensively different from accounting standard, right? So there was a need for having a separate format for financial statement as well, right? And IND AS were applicable from the year 2016-17. So now there was a need for a amendment in Schedule 3 or having a separate format. So on 6 April 2016, there was a different Schedule 3 which was notified. There was a different Schedule 3 which was notified. And when you read that 6 April 2016 notification, when you read 6 April 2016 notification, in 6 April 2015 notification, it has said that whatever has been notified earlier has been called as a Division 1 to Schedule 3. And that format will be applicable to the companies which are preparing their financial statement as per Indian GAAP. And now what we are giving from this line, we are giving a new format. And this entire new format or new requirement is applicable for the companies which are complying with the requirement of Indian Accounting Standard, right? So on 6 April 2016, we had two divisions. Division 1 to Schedule 3, which was applicable to the companies which are complying with the old accounting standard. On 6 April 16, Division 2 had been notified, and which was applicable to the companies which are complying with the Indian Accounting Standard, right? Then when we are moving to the next year, then on 30th March 2019, 30th March 2016, I would request each one of you that please write down these notification, these dates, right? Then on 30th March 2016, one more notification came for application or applicability of IND AS on NBFC companies. right? On banks and insurance companies, Ind AS is not applicable. But on 30th March 2016, there was a applicability defined for applicability of Ind AS on NBFC companies. And it has said that the Ind AS on NBFC company will be applicable from the financial year 18-19. Okay. And on 11 October 2018, there was amendment in Division 1 to Schedule 3. There was amendment in Division 2 to Schedule 3. And a new Schedule 3 was notified as a Division 3. And what was the objective of Division 3 to Schedule 3? Can anyone tell me? What was the objective of Division 3 to Schedule 3? Can anyone tell me, please? Yeah. Khushbu, Ame, Mr. Nilesh, Neeral, Parikshit, Prakash. Yes, and that was for NBFC companies, and those NBFC companies on which Ind AS is applicable. And that Schedule 3 format was on the basis of liquidity, right? So now till 11 October 2018, we had 3 divisions to Schedule 3. Division 1 to Schedule 3 is applicable to the companies which are applying accounting standard. Division 2 to Schedule 3 is applicable to the companies on which Ind AS is applicable. Division 3 to Schedule 3 is applicable to the companies, NBFC companies, on which Ind AS is applicable, right? So this was the genesis of Schedule 3. So now we had 3 Schedule 3. Now the question arises, sir, if a NBFC company on which Ind AS is not applicable can apply the Division 3 to Schedule 3? Tell me, if on a NBFC company on which Ind AS is not applicable can apply Division 3 to Schedule 3, what is your answer? Khushbu is saying no. What about others? Any other opinion? Any other view? Any other view? Yes, Khushbu is right. NBFC companies on which Ind AS is not applicable cannot apply Division 3 to Schedule 3. Why? Because there are a lot of terminologies. There are a lot of concepts which are based on Indian accounting standard, and hence on NBFC companies on which accounting standards are applicable, they cannot apply Division 3 to Schedule 3, right? They cannot apply Division 3 to Schedule 3. Now the time has come, 24th March 2021, when there was a blast in Schedule 3. And can you tell me what was that blast and why that blast was there, and why this session has been conducted by WIRC of ICAI? Yeah, any guess, any knowledge? Yeah, major changes in Schedule 3. You are right, but why? In February 2020, I would request each one of you that please write down these dates. In February 2020, the government has amended CARO, right? And who is responsible for issuing the report under CARO? Is it management or auditor? Mr. Subramanyam, is it management or auditor? Of course, it is auditor, right? And there was an extensive requirement of reporting under CARO, right? So now the lobby of the auditors have reached to MCA and asked, the management is operating the business for the entire year, and we the auditors are conducting audit and visiting their place hardly 1 month or 2 months in a year. So how can we comply with, or how can we provide our opinion on these kind of robust requirements if management will not take the responsibility of those disclosures, right? And when this CARO 2020 was notified, it was applicable from financial year 2021, right? And government has agreed with the view of the auditors that you auditors, how can you ensure about some extensive disclosure if management is not ready to provide those disclosure. For example, undisclosed income, right? How can an auditor commenting on the undisclosed income if something which is not disclosed by the management, right? And that was a fair ask, right? Second, how can an auditor opine on that how many immovable properties are not in the name of the company if management is not ready to disclose those aspects in their financial statement, right? How can the auditor comment on the working capital things? How can the auditor comment on the survival of the business if the management is not ready to comment on important or critical ratios, right? So these were the aspects on which there was a requirement to raise questions to the management, and management needs to answer within a defined protocol, right? And that is why this CARO 2020 got deferred and the new discussions were started to amend Schedule 3, because Schedule 3 is responsibility for Schedule 3 is responsibility of whom? Is it management or auditor? Is it management or auditor? Yeah. It is management. Yes, it is management, right? And in India, if there is no red light, I can tell you, nobody will stop, right? On the roads. Everyone is moving onwards, right? Nobody will stop. So the first thing which was in the mind of MCA and ICAI was to revise Schedule 3, because management is responsible for the preparation of the financial statement officially, right? You can say that, sir, we are also preparing the financial statement. I am talking officially. Auditor is responsible for providing the opinion whether the financial statements are presenting true and fair view or not. So management is responsible for the preparation of financial statement. Auditor is only responsible for providing the opinion on the correctness or true and fairness of those financial statement. So with this, the discussion was started, and fortunately, I was also part of the committee when the discussions on amendment in Schedule 3 had started, right? And with this, on 24th March 2021, Schedule 3 was amended. And when I say Schedule 3, Division 1, Division 2, Division 3 of the Schedule 3 got amended, and there was a huge changes in the Schedule 3. I can tell you, across India, there are a lot of sessions which are happening on Schedule 3. Why? Because there are huge amendments which are there in the Schedule 3. And let me tell you, right now I'm taking a session from the hotel room, and in the same hotel, from 6:45 to 9, I have to speak on Schedule 3, right? Again, in next week, I have to speak on Schedule 3, right? So there are a lot of sessions which are getting conducted on Schedule 3. Why? Because there are a huge round of amendment in Schedule 3 on 24th March 2021, and which was applicable from the financial statement or financial year starting from 1st April 2021, right? So now my question to you guys are, for example, for the financial year 2021, the management is preparing the financial statement in the year 21-22 or 22-23, right? 20-21 फाइनेंशियल ईयर के फाइनेंशियल 22-23 में 21-22 में बना रहे हैं. Now tell me whether the requirement of this amended Schedule 3 will be applicable on the financial statement for the period 2021, which is getting prepared in this year. What is your view? What is your view? Because the companies which are in IBC or in the companies which are in NCLT, so probably these companies, the financial statement of these companies are very late. Khushbu is saying yes. What about others? What about others? Yeah. What about you, Mr. Nilesh, Mr. Prakash, Mr. Subramanian, Mr. Ame? What is your view on this? अगर 20-21 के फाइनेंशियल्स अगर 22-23 में बना रहे हैं, तो क्या शेड्यूल 3 की रिवाइज रिक्वायरमेंट एप्लीकेबल होगी? Answer is no, it is not applicable. It is not applicable, right? It is not applicable. Second question, sir, Caro 2020 is not applicable. Caro 2020 is not applicable to small company or one-person company. Whether Schedule 3 is applicable to a small company and one-person company. Whether this amended requirement of Schedule 3 will be applicable to one-person company or small company. What is your view? Yes, the entire Schedule 3 is applicable to small company and one-person company, my dear friends. Entire Schedule 3 is applicable, right? Although Caro is not applicable, but Caro is the auditor's report. Schedule 3 talks about the format of financial statement, and every company has to prepare format of financial statement. Another question. If there are banking companies, for example, HDFC Bank, State Bank of India, whether on these banks, whether on the electricity companies, Schedule 3 is mandatorily applicable or not? Schedule 3 is mandatorily applicable or not? Mr. Neeral Sabu, Khushbu madam is saying no. Yes, you both are correct. It is not mandatorily applicable, but in absence of a specified format, these companies are applying Schedule 3. But if the requirement of Schedule 3 is inconsistent with the requirement defined under the RBI Act, or for example, let's say Electricity Act, in that case, those requirements of Schedule 3 will not be followed, but these companies are also following Schedule 3, but it is not mandatorily applicable, right? I hope it is clear to everyone. On my screen, you can see that I have told you that the concept of Schedule 6, then revised Schedule 6, then your Division 1 to Schedule 3, Division 2 to Schedule 3, and Division 3 to Schedule 3. So friends, I have taken Hero Honda Motors Limited balance sheet for 31st March 2010, and this balance sheet has been prepared as per old Schedule 6. On the right side, the balance sheet has been prepared as per revised Schedule 6, and this balance sheet is for the 11-12 financial year, right? You can see the concept of non-current and current, and the concept of non-current and current is not there in our old Schedule 6. Again, on the screen on the left side, this balance sheet is as per revised. This balance sheet is as per revised Schedule 6. Okay, this balance sheet is as per not revised Schedule 3. This balance sheet is as per Schedule 3, right? And when you see, so this balance sheet is as per Division 1 to Schedule 3. Division 1 to Schedule 3, right? On the right side, this balance sheet is as per Division 2 to Schedule 3, which is IND AS compliant. This is AS compliant. This is IND AS compliant Schedule 3, right? And if you see on the screen, HDFC, which is NBFC company, this balance sheet is as per Division 3 to Schedule 3, right? So I've given the format of old Schedule 6, revised Schedule 6, Division 1, Division 2, and Division 3 to Schedule 3, right? I hope you will find this useful. I will share this PPT to WIRC of ICI and you will get this PPT, right? Now coming to the major amendments in Division 1 to Schedule 3. So let me talk about these amendments and let me tell you, these amendments were in Division 1, Division 2, and Division 3, right? So whatever I'll discuss on Division 1, largely 80%, 90% amendments are same in Division 2 as well, right? So I will be covering Division 1 because I do understand that most of the listed companies have already reported their financial statement by 31st May, right? The big companies have already implemented, which are into IND AS, have already prepared their financial statement. So now the time is mostly there till September for private limited companies or the companies on which IND AS is not applicable. So I'll take the base as Division 1, and Division 1 is applicable for non-IND AS compliant companies, right? I'll also talk about Division 2 where, you know, where the changes are there. And let me tell you, in my PPT, in every amendment, I have also marked whether this amendment is there in 1, 2, and 3. And I have also marked whether this amendment is related to Caro or not, right? I hope the context is clear to everyone, right? Let me know If there is any challenge, let me know. If you are finding me very fast, let me know if you are not enjoying the session. I would appreciate your response on the chat box. Okay, let's move on. The major amendments in Division 1 to Schedule 3. Thanks, Khushbu. And these amendments are applicable from April 2021, right? Financial statement beginning from 1st April 2021, not the audit beginning from 1st April 2021. Mind my words. The financial statement beginning for the period starting from 1st April 2021, not the audit started from 1st April 2021, right? Okay. So we talked about this, and of course, government wants to, or regulator wants to have more transparent and more stringent disclosure. That is why this amendment to Schedule 3 is there, right? Now let's talk about some balance sheet line items. This is the balance sheet format, right? In the balance sheet format, in Accounting Standard Division 1, right? So the word tangible asset have been replaced with the word property, plant and equipment, right? And let me tell you earlier, the word property, plant and equipment was there. But inside the property, plant and equipment, the word was tangible asset and intangible asset. Under property, plant and equipment, this was an old presentation. Under property, plant and equipment, there was a word tangible asset and intangible asset. Tell me, as per Accounting Standard 10 or as per IND AS 16, Accounting Standard 10 or as per IND AS 16, can the intangible asset be covered under property, plant and equipment? Answer is no, because when you look at the definition under AS 10 for property, plant and equipment, it says that property, plant and equipment are tangible items which are held for use in production or supply of goods and services, held for rental purposes, held for administrative purposes, and to be used for more than one period, which is technically more than 1 year. So if the definition of PP start with the tangible item, then how can intangible asset be a part of property, plant and equipment's main category, right? So this was an error, I can say that, in the old Division 1 to Schedule 3, and now this error has been rectified and the heading has been changed from property, plant and equipment to property, plant and equipment and intangible assets, right? And instead of tangible asset, the word in the sub point have been used as a property, plant and equipment, and the second one is intangible asset. So this is minor correction in the heading and subheading of the property, plant and equipment in the Division 1 to Schedule 3. If I talk about Division 2 to Schedule 3, it was always property, plant and equipment, intangible asset to be shown as a separate line item. Okay. Now, the second question, deferred tax asset and deferred tax liability. Tell me whether deferred tax asset and deferred tax liability, because if you see on the format of Schedule 3, the deferred tax liability have been shown under non-current liability. And there was no line item called as a deferred tax liability. On the asset side, the deferred tax asset have been shown as a non-current asset, and there was no line item which talks about deferred tax asset under current assets category. Now tell me whether, if you are expecting that my DTA is recoverable within 1 year or DTL has to be adjusted within 1 year, can you show that DTA or DTL as a current asset or current liability? Can you show the DT and DTL as a current asset and current liability? Will you show that? Okay, I got one answer, I got two answers, and both of them are saying no. What about others? I do believe there are also other chartered accountants who is watching this session or who is attending this session, who are attending this session. Yes, DTA, DTL will always be non-current. DTA, DTL will not be current. It will always be non-current, right? As per the ICI guidance in terms of Division 1 to Schedule 3 and Para 56 of IND AS 1, please write down. If I talk about Division 2 to Schedule 3 on which IND AS is applicable, Para 56 of IND AS 1 says that deferred tax asset and deferred tax liability will always be non-current. It will never be current. Para 56 of IND AS 1. But under accounting standard, there is a ICI guidance which says that DTA, DTL will always be current, right? Third, what is meant by trade receivables? What is meant by trade receivable? So trade receivable, receivables for goods and services which have been sold in the ordinary course of business on credit basis. Am I right? Yeah. Yes, Mr. Bhushan. Receivable against sale of goods and services, right? So what is the nature of trade receivable? Is it current or is it non-current? Is it current or is it non-current? It will always be current. Generally, it is current. Normally, it is current. When it will be non-current? When it will be non-current? When the trade receivables could be non-current. The trade receivable would be non-current when it is recoverable after 12 months. For example, I am, let's say I'm into a business of manufacturing some capital equipment, right? I am into a business of manufacturing capital equipment. And my client is, for example, this infrastructure companies, right? And as far as my business is concerned, I used to provide a credit period of, let's say, 1.5 years to my clients or to my customers, right? For example, if I'm selling goods in February 2021, so I am giving them a credit period of at least 18 months. In this case, while finalizing the balance sheet for 31st March 2021, tell me this receivable will be current or this receivable will be non-current. Assuming my operating cycle is also 12 months, assuming, because you can say that probably your operating cycle is 18 months, then it should be current. You're right. But just for the sake of giving some clarity, I am assuming this operating cycle is also 12 months or operating cycle cannot be determined. And I am using the window of 12 months for current, non-current. In this case, in this example, what will be the classification of trade receivable? Is it current or is it non-current? Yes. Yes, Mr. Vishwanathan, Mr. Bhushan, Khushbu, Parikshit. Yes, you all are right. It is non-current. Second example, I am selling goods on credit without any credit period, without any credit terms. Right. And I've sold goods on credit. And I've sold goods on credit on, let's say, 1st April 2021. Right. And I have not received any payment. Or let's say I have sold goods on 28th March 2020. And I have not received any payment on the balance sheet while I'm finalizing on 31st March 2022. And Mr. Parikshit is auditor of that company, right? So Mr. Parikshit, where you will show those trade receivables, your client or your client has not received the payment from those trade receivables since last 1.5 years. So where you will show, is it current or is it non-current? There was no credit terms, there was no credit period which was given to that client, but that client has not paid the money, that customer has not paid the money to your client at his liberty. Tell me, is it current or is it non-current? Yes, it should always be current if there is a contractual right to receive cash after 12 months. For example, in my first example, when I said that there is a contractual terms that says that I cannot demand payment within 18 months from the date of sale. In that case, it was non-current, but in this case, it should always be current. So for classification as a current and non-current, you have to look at the reporting date, first thing. Second thing, you have to see not the past, you have to see the future, right? You have to see the future, okay? You have to see the future, okay? Is it clear? You have to see the future. And Khushbu has asked one question, and Khushbu, I hope I have replied the answer of your question. For current and non-current classification, you have to see the definition of current and non-current, right? You have to see the definition of it. And regarding the definition of current, it says that you have to see the future. Future means you have to see if you are expected to recover the money within 1 year, then of course it is a current. If not, then it is non-current, right? So you have to see from that perspective. if you have some contractual agreement which allows or which not allows you to receive the money within 12 months, in that case, it would be non-current. Otherwise, it will always be current, right? So actual receipt of money is not important. The contract is important. The expectation is important. And that expectation is backed by some facts and circumstances, right? Now, my question was, so I have talked enough about current and non-current. Now, my question was, when you look at the balance sheet, in the balance sheet and on the asset side, you will find the word trade receivable. If there are some non-current trade receivable, in that case, where you will cover those non-current trade receivable? Will you show that non-current trade receivable as a separate line item as a trade receivable in non-current assets, or what you will do, or what will you do? I believe you have got my question. Whether it will be a separate line item as a trade receivable in the non-current thing also, in the non-current bucket also, or you have to show in some other, at some other places. Yes, Mr. Vishwanathan, you are right. The non-current trade receivable has to be shown as a other non-current asset, as other non-current assets, right? So in the notes to accounts, in the breakup of other non-current assets, you can write that in other non-current assets, there is a trade receivable separate line item. But on the face of the balance sheet, you're not required to show this line item as a separate line item, right? In a similar fashion and in a similar manner, what about non-current trade payable? When you look at the balance sheet, in the balance sheet, on the current side, trade payable is there. And if there is a contractual agreement that you will pay your creditors after 1 year, of course, it is a non-current trade payable. Then where you will show those non-current trade payable? Will you open a separate line item known as a trade payable on the balance sheet, on the face of the balance sheet under non-current category? Or you will show at some different place? What could be the place where non-current trade payable will be shown? Tell me. Yeah. Yes, it will be other long-term liabilities. And under other long-term liabilities in the notes to accounts, you have to show this non-current trade payable separately, right? Good. My another question, capital advances. Tell me, capital. For example, what is the meaning of capital advances? First of all, what is the meaning of capital advances and how it is different from advance to supplier? What is the meaning of capital advances and how it is different from advance to supplier? My question is, what is the meaning of capital advances and how it is different from advance to supplier, right? Yes, so Mr. Bhushan is saying advance for procurement of capital goods. I think you're talking about property, plant and equipment, intangible asset, investment property, right? Khushbu is saying advance against capex, for example, advance from plant and machinery. Advance for plant and machinery. Very good. So advance to supplier is kind of a OPEX advance, right? Which is given to the supplier for procurement of goods and services which are used in the ordinary course of business. But when I talk about capital advance is something which is given to the supplier for goods. And when I say capital goods, it is a equipment, intangible asset, or it could be investment property, right? Now my question to the forum is, if a company has given a capital advance and that advance is going to be settled in the next 3 months, where this advance would be classified in the balance sheet? I am talking advance. And again, I am repeating the question. A company has given, for example, a company has given an advance to the, let's say to JCB, right? For the purpose of purchase. And it is a plant and machinery, right? On 25th February 2022. And this advance is going to be adjusted by 30th June 2022, right? You are preparing the financial statement on 31st March 2022. Now my question is, you know that by 30th June 22, the JCB has to supply the cranes. So where this advance would be presented, first of all, is it current or is it non-current? And where the line item will be there, and what will be the line item? So one answer I got from Khushbu. What about others? What about others? So guys, I'll not move until and unless you will not respond. I'm a firm believer of one thing. Don't take everything on the plate. Take 5-6 items and eat completely, right? So instead of eating the entire amendment to Schedule 3, I would be happy if you will eat only 8-9 items, but completely. Mr. Vishwanathan is saying current, and he has a logic, that because it is going to be settled within 12 months from the reporting date, and hence it should be current. I believe this is the logic, Mr. Vishwanathan. Okay, and Khushbu has a logic. C is saying it is non-current, and C is having a logic that ultimately it has to be adjusted. It has to be going to be settled as a non-current item because this planted machinery will be PP. So why I have asked this question in the format of balance sheet? Yes, Khushbu, you are right. So Mr. Vishwanathan, it will always be non-current. If it is a capital advance, it will always be non-current, right? As per the guidance note on Schedule 3, as per the ICI guidance, this capital advance will be shown as a long-term loans and advances as a separate line item. It will always be non-current. It will not be current. Why? Because it is going to be adjusted. It is going to be converted into a property, plant and equipment. But same question I'm asking for advance to supplier. Right, the same company has given an advance to supplier for procurement of raw material, and this advance has been given on 25th February 22, and this raw material is expected to be received by 30th June 22. Where you will show this advance? Current, non-current? Of course, loans and advance will be there, but is it current or non-current? Yes, then it is a current. It is not for capex, it is for opex, right? I hope the audience have well understood the concept of this capital advance and OPEX advance. I hope so. And the audience which is already aware of this concept must got the concept revised with the help of this session, right? Is it clear? Yes. Now, what is the change? So we talked about this thing. Now, what is the change in the balance sheet further? Can anyone tell me any further change in the balance sheet format? Any other change in the balance sheet format? Security deposit, right? So earlier, the security deposit given for the purpose of taking the premises on rent, right? For example, the company has taken warehouse, godowns, offices on a rental basis, and they have paid security deposit. They have paid security deposit to EB board, electricity boards. They have paid security deposit to telephone department. They have paid security deposit to provide the gas, to avail the gas connection. Now tell me whether these kind of security deposits are in the nature of loans and advances. Can you say that? Yes, we have given the loans and advances to the landlord. Can you say that? We have given the loans and advances to the electricity boards. Can you say that? I have given loans and advance to HP for providing me a gas connection. Can you say that? So earlier in division 1 to schedule 3, when the company is giving a security deposit, the company was showing it as a loans and advances, right? But tell me, is it a loans and advance? What is your view on that? I'm just asking a plain view. No, it is actually not a loans and advance. You cannot say ना कि मैंने तो भैया वो टेलीफोन के कनेक्शन लेने के लिए मैंने BSNL को या एयरटेल को लोन्स एंड एडवांस दे दिया. You will not pay any loans and advance. So technically speaking, it is not a loans and advance. It is your other non-current asset or other current assets. Am I right? So this has been, I would not say this has been amended. Rather, I would say this has been rectified. And now the security deposit has to be shown as a other non-current asset or as a other current asset, whatever the case may be. I hope you all agree with this logical amendment. I hope you all agree, right? When I talk about division 2 to schedule 3, in division 2 to schedule 3, it was also showing as a loans in the financial asset category. And again, it has been reclassified from loans to, it has been reclassified to other financial asset. It could be other non-current financial asset, or it could be other current financial asset, depending on the settlement criteria, right? Another thing, the company has taken a long-term loan, right? And this long-term loan is for a period of 5 years. This long-term loan is for a period of 5 years, right? This long-term loan is for a period of 5 years. And for example, the company has taken a loan for, let's say, 5 years. In year 1, the payment is 1 lakh. In year 2 to 4, the payment is remaining 4 lakh. The remaining payment of 4 lakh will be made in year 2 to 4, right? The remaining payment of 4 lakh will be made, right? Now my question to the house is, what is the presentation in division 1 for, or let's say division 2 for this long-term loan, where you will show this long-term loan? Is it current? Is it non-current? In current and non-current, what should be your line item in the balance sheet? Again, I will say that this amendment is a very logical amendment. I will wait for your answer. Yeah. Any response with that? So where you will show, Mr. Bhushan is saying payable within 1 year short-term borrowings. Okay. And what about payable after 1 year? Of course, long-term borrowings, right? So earlier, payable after 1 year has been shown as a long-term borrowings. Fair enough, right? So from 2 to 4, it has to be shown under the, I'm talking about division 1, then I'll talk about division 2. In division 1, the long-term borrowing from for the period period 2 to 4 has to be shown as a long-term borrowing, right? This is non-current liabilities, point number A. Point number A, long-term borrowing. Okay. And the amount or installment which is payable within 1 year, so that has been shown under other current liability. Under other current liability, not under short-term borrowings, under other current liability. Tell me, if I am a user of the financial statement and I have to see the debt profile of the company, so where I need to see the debt profile? In short-term borrowings and long-term borrowings, right? But one element of long-term loan is sitting in the other current liability. So probably it could be missed from my eyesight. It could be missed from my analysis, right? Because if the short-term borrowings is there, then why you are showing that item as other current liability, right? If I have taken a loan from the bank, something which is repayable within 1 year, it has to be shown as a short-term borrowings. Something which is repayable after 1 year, it has to be shown as a long-term borrowings. Are you all agree with me? Are you all agree with me, or you don't agree? You agree? Very good, right? So what has been changed? What I'm saying that has been changed, right? Now the amended requirement is this current maturities of long-term debt is not part of your other current liability, is now become part of short-term borrowings, and this is a very logical change, right? Even I'm into a listed company and my investor relation department was always asking, Alok, what is the debt of this company, right? I said, why can't you refer the balance sheet? He said, यार मुझे नहीं समझ में आता, तुम लोग फाइनेंशियल रिपोर्टिंग वाले पता नहीं क्या करते हो, तुम एक पोर्शन डालते हो बोरिंग में, दूसरा पोर्शन डालते हो अदर करंट लायबिलिटी, right? Then I need to tell him that the current maturity of long-term debt which is showing under the other current liability is nothing but a short-term borrowing, right? So now what has been amended in division 1, this current maturities of long-term debt has been shifted to the short-term borrowings. In division 2 to schedule 3, which is IND AS compliant schedule 3, what has been changed? In division 2 to schedule 3, the change was earlier the long-term portion of the loan was always shown under long-term borrowings under financial liability, and the current maturity of long-term debt was shown under other financial liability like other current liability. Short-term borrowing was also there, but it was never shown as a short-term borrowings due to the requirement of Schedule 3. Now it has been amended, and now this current portion has been shifted to the short-term borrowings, and of course long-term was always there. So now when you look at long-term and short-term, you will get the entire debt profile of the company, right? And again, this is a very logical change. I would believe that this is a very logical change. So this was an amendment on security deposit because it is never a loan, and this was an amendment in terms of your current maturities of long-term debt. Coming to the third amendment in the balance sheet under Schedule Division 2 to Schedule 3, which is IND AS compliant Schedule 3, I can say that under IND AS compliant Schedule 3, what has been changed? The third thing, under Division 2 to Schedule 3, in case of a leases, there is a requirement to show the leasehold liability on the face of the balance sheet, right? Earlier, the requirement for showing the leasehold liability on the face of the balance sheet was not there. Now this leasehold liability has to be shown on the face of the balance sheet under long-term borrowings and under short-term borrowings. I hope it is clear to each one of you so far. I hope it is clear to each one of you so far or not. Tell me. Yes, I can show one disclosure from Hindustan Unilever Limited, and you can see the non-current and current portion. Security deposit has been shifted from loans to other financial assets, right? So this is a disclosure of other financial asset, and this current and non-current security deposit has been shown under other financial assets, right? Now one question. So Alok, you are saying that this amended requirement to Schedule 3 is applicable only for the period beginning from 1st April 2021. So if a company is preparing a financial statement with a comparative of 2021, so whether the requirement is also applicable to the comparative or it is only applicable to current year? Tell me whether this requirement is also applicable to comparative or it is only applicable to the current year. Yes, it is also applicable to the comparative. It is not only applicable to the current year, it is applicable to the comparatives as well. Okay, right. Now let's move to the next disclosure. In the general instructions, tell me, in the general instructions, so if you are preparing a financial statement for a company, right, under Division 2 and Division 3, the rounding off was always mandatory, but under Division 1, the rounding off was never mandatory. Now tell me, what is the stand after this change, after this amendment? What is the stand now? Whether rounding off is mandatory or rounding off is still not mandatory? Or rounding off is still not mandatory? It's compulsory now. Why? Earlier the word used was may. Now this may word has been substituted with shall, right? So shall means it is mandatory now. Second, when you look at the rounding off requirement, whether you will look at the revenue from operations, I mean to say turnover, or you will look at the total income, what you will look at? Is it revenue from operations, I mean to say turnover, or is it total income? Earlier the requirement was turnover, now it is total income. For example, let's say there is a company which is into the business of selling cements, right? For example, I'm just taking an example to make you guys understand. For example, Ambuja Cement Limited is a company which is selling cements, and they have a revenue of 20 lakh rupees from the sale of cement. And they have a revenue from interest income. They have an income from the way of interest. They have an income for, let's say, 100 crores. So now the total income is 100 crore 20 lakhs, right? Tell me whether rounding of provision will be applicable in this company. Whether rounding of provision will be applicable? Yes, rounding of provision will be applicable. First, you are not required to see the turnover, I mean to say revenue from operation. You have to see the total income, right? From the perspective of total income, first thing. Second, what is the threshold for rounding off? I will give you a mool mantra for remembering this forever, right? First, there are two thresholds. One, up to 100 crores, right? It is not 100 crore or less. The first one is up to 100 crores, right? Up to means 99 crore, 99 lakh, 99,999, up to 100 crores. So if the first threshold is up to 100 crores, then of course, the next one is greater than or equal to 100 crores, right? Right. Now coming to the rounding off. The rounding off starts from hundreds. The rounding off starts from hundreds, right? Hundreds, then thousands, then lakhs, then millions, then crores, then billions, right? So if the total income is less than 100 crores, so total income is less than 100 crores, then what is the maximum unit? What is the maximum unit before crores? What is the maximum unit before crores? Million. Million is the maximum unit now before crores, right? Yes or no? Million is the biggest unit, largest unit before crores. So if the company has a total income of up to 100 crores, then the rounding off can happen in terms of nearest hundreds, thousands, lakhs, or 10 lakhs, I mean to say millions, or decimals thereof. For example, if you are doing this rounding off in lakhs and the number is, for example, you are rounding off in lakhs and the number is, let's say, 90 lakh 56,257. So in lakhs, if you are doing the rounding off, in that case, it would be 90.56 lakh, right? But sir, we have seen a lot of listed companies and the listed companies are not reporting into decimals. Yes, you are right. In that case, you are allowed to report it as a 91 lakhs, right? And I can show you, if you are reporting into a complete numbers, which is not in the decimals, in that case, what you can do, you can simply say that, for example, there is some expenses, which is, let's say, 4 lakh. So when it is 4 lakh, it will always be dash because it is less than 5 lakhs. So you can just put a star mark and you can write that the number is less than 1 lakh. The number is less than million. If you are reporting into lakhs, you can say that the number is less than 1 lakh, and that is why it has not been reported, right? So you have to see in that manner, right? Are you clear on this, or should I give you some examples? Should I show you some example? Are you clear on this, or should I show you some example? Is it clear or not clear? Guys, until and unless you will not say, you will not speak, I would not be able to understand that if it is clear or not, right? Good. So let's move on. The next change is into the equity share capital, right? So technically speaking, there is no change in equity share capital except one change. And what is that change? The change in the promoter shareholding disclosure, right? And the requirement is, so what is the current requirement as of now? If some shareholder, if somebody is holding a share capital for more than 5%, it is required to be disclosed separately. Am I right? It is required to be disclosed separately. Yes. So now, if that party is a promoter and that promoter is holding even 1% of shareholding, so thus reporting of that promoter shareholding becomes mandatory. Are you getting me? Earlier, if there was a promoter and promoter was holding more than 5%, then only the disclosure was mandatory. Now, the company says that now the requirement of Schedule 3 is, if there is a promoter and that promoter is only holding one share, even though this disclosure become mandatory, And what is the disclosure? The disclosure is name of the promoter, number of share he holds or she holds, or that entity holds, percentage of the total shares, 2%, 1%, 3%, percentage change during the year. What is the change from the opening to closing? That is also required to be disclosed. Let me show you the Hindustan Unilever Limited disclosure. Like, these are the companies, and when you see this company is a promoter company, Unilever, Brook Bond, these are having 0.8%, 1.4%, right? 2.9, 4.5, 2.2, these all are having less than 5%. Still, this disclosure has been given. Why? Because this is the detail of shareholding by the promoter of the company, right? So this is current period. This is last year. Since there was no percentage change in the year, had there been some percentage change, it has to be disclosed, right? It has to be disclosed. Now the question comes. Now my question to you is it necessary that the promoter will always be a shareholder? Is it necessary that the promoter will always be a shareholder of the company? What is your view on this? Very learned audience, I would say. I have never seen this kind of audience. Very learned audience. Yes, you all are right. So not necessarily promoter is always a shareholder of the company, right? Sir, if promoter is not a shareholder of the company, then do we require to report the name of the promoter in this disclosure? Do we require to report or disclose the name of the promoter in this disclosure? Answer is no. For coming into this disclosure, two conditions are mandatory. First, it should be promoter. Second, he must be a shareholder, right? If that promoter is having a shareholding, only in that case this disclosure is important, or this disclosure is required. Otherwise this disclosure is not required. Okay, is it clear? Yeah. Sir, what is the meaning of promoter? The promoter has been defined under section 2 subsection 69 of the Companies Act, and it says that the promoter is a person who has been named as such in the prospectus. So if you are the auditor of the company, you have to see what is the name of the promoter which is given in the prospectus of the company, right? Second, you have to see the name of the promoter in the annual return referred to in section 92, MGT 7. I'm talking about MGT 7. Okay. Third, who has control over the affairs of the company directly or indirectly, whether as a shareholder, director, or by way of a contract, who is controlling the affairs of the company. Third, in accordance with whose advice, directions, or instructions the board of director of the company is accustomed to act. Taking a hypothetical example, Mr. Ratan Tata, for example, Mr. Ratan Tata is not holding any share of the Tata Group, but the entire board is taking advice from Ratan Tata, Mr. Ratan Tata, and the entire board is also complying with his advice and working on the basis of the advice given to Mr. Ratan Tata. Now tell me, as per Companies Act, whether Mr. Ratan Tata would be qualified as a promoter or not? Yes, of course. Why? Because section 2 subsection 69 clearly says that the promoter is a person on whose advice, directions, or instruction the board of directors of the company is accustomed to act. Now, second example. For example, Mr. Ratan Tata is a chartered. Tata is providing the advice in the professional capacity. For example, Mr. Tata is providing advice to the board in the professional capacity and charging money from the board. In that case, can he will be considered as a promoter of the company? If he given the same advice to other client, he would charge same money. Can Mr. Tata would be qualified as a promoter of the company? What is your view on this? Yes or no? Mr. Vishwanathan, Khushbu, what is your view on this? Yes, no? He would not be qualified as a promoter. Why? Because provided that nothing in subclause C shall apply to a person who is acting merely in a professional capacity, right? So मैंने आपको example भी दिखा दिया. I've shown you this example as well. Now let's move on to the next topic. Now in balance sheet as far as trade payable is concerned, right? So what is meant by trade payable? We have discussed that the trade payable means the payable for goods and services. Now tell me whether employees payable would be qualified under trade payable or not, or others payable. Employees payable to employees would be qualified as a trade payable or other payable. Second question. Whether it is a trade payable or other payable. I have asked two questions. employee benefits payable, salary payable, or audit fee payable? What is the right presentation of these payables in the balance sheet? Is it a trade payable or other payable? It is trade payable. Please mind my word. What is meant by trade payable? Trade payable means a liability or a payable on account of goods and services which is obtained in the ordinary course of business. What employee is giving you? What employee is giving you? You have a contract of service with the employee, right? You have an employment contract with the employee. Employee is giving his services to you. Auditor is giving his services to you. And this is in the ordinary course of business, right? So these are the trade payable. These are the trade payable, right? So what has been changed? First thing. So friends, where you have been showing any breakup for this trade payable in the balance sheet or in the notes to accounts before this amendment? Have you showing any breakup of this trade payable in the balance sheet or any other place prior to this amendment? Yeah. But where? In MSME? So trade payable with micro, small and medium enterprises, micro and small enterprises, right? And other than micro and small enterprises, right? Now, the aging is also required, right? Now the aging is also required. And government says that, boss, you have to show the aging of trade payable, that how much of trade payable is within a year, less than 1 year. How much trade payable belongs to 1 to 2 years. How much trade payable belongs to 2 to 3 years. How much trade payable belongs to more than 3 years, and what is the total for that? Right. Right. And if there are some accruals where the bills has not been issued, so those unbilled dues or those accruals has to be shown as a total here, and this total should be tally with the balance sheet. Okay. So what is a trade payable? Trade payable means where the invoices has been raised or contractually the money has been due. What is accrual? Accrual means where the invoices has not been raised or contractually the money has been not due but accrued, right? Now, where the question comes and why government is asking for these kind of descriptors, and this aging is required from the due date of payment. For example, so Khushbu, to my mind and to my view, this employee related payable is not a other current liability. This should be your trade payable, right? This should not be shown as a other current liability, right? So talking about this aging, Mr. Bhushan is asking, is it necessary to obtain MSME certificate from suppliers? I would say not from the MSME Act perspective, but yes, how will you do the internal control as an auditor? How will you ensure the control of that, right? So to my mind, yes, I have seen a lot of listed companies. I have seen a lot of companies. So the supply chain department or the department dealing with the vendors are asking for the MSME certificate from its vendors, right? And vendors are providing that, right? So this is a very basic kind of thing which is required from the vendors. So to me, yes, it should be important to obtain. I'm not saying necessary to obtain, important to obtain, right? Second, from where you will classify the aging of this trade payable? From the due date of payment, from the due date of payment. Okay. Now, what is the due date of payment? So I can talk from my organization perspective. For example, whenever we are entering with the vendor, any new vendor, so we are first clearing the payment terms, right? So when I'm talking about the payment terms, so in my organization, the payment term is 30 days from the raising of invoice, or 30 days from, let's say 45 days from the raising of invoice, or 30 or 45 days from the due date, right? So now the question comes, if due date is not there, then which date should be considered for the purpose of aging? Is it the date on which the in the books of accounts? For example, your client is maintaining a tally, BG or ERP software. So whether it is a date on which the accounting entry has been passed in the tally, ERP or SAP, or it is the date when the goods and services have been received. Because as far as this due date is concerned, if due date of payment is received, then it is okay. But if the due date of payment is not there, then which date will be considered as a due date? क्या जिस दिन बुक्स ऑफ अकाउंट्स में एंट्री पास की है, क्या उस डेट को मानेंगे, या जिस दिन गुड्स एंड सर्विसेज रिसीव हुए उस डेट को मानेंगे? What will be the date? Khushbu is saying from the date of transaction. So what is the date of transaction? Mr. Vishwanathan is also saying goods and services received. I can say that you both of you are correct. So if it is not clear, then you have to draw the analogy from the MSME Act. And what MSME Act says that? MSME Act says that the due date of payment will start from the date when you are due date of payment is like an appointed date. And as per MSME Act, what is the appointed date? The appointed date is the date when the goods and services are received. Right? So this should be goods and services when the goods and services are received. Right? Is it clear? I hope it is clear to all of you. Now the second thing is, so we talked about aging, we talked about outstanding from due date of payment, we talked about the scenario where due date of payment is not there. Now the thing is, sir, what is the breakup in which we have to make the disclosure? So you have to make the disclosure in the breakup of MSME and non-MSME. MSME and other than MSME, right? So if it is a MSME entity, and apart from MSME and others means non-MSME, and apart from MSME and non-MSME, you have to provide a breakup of disputed with MSME and disputed with non-MSME also. Now the question arises, and I'll tell you, this is not a simple disclosure. You have to take a due care of caution while auditing these kind of disclosures or while making these kind of disclosures. Right? If it is with the MSME entity, then your total, first of all, your total should be tallying with what you have given in the balance sheet. And as per section 22 of MSME Act, you have to give some sort of disclosures, right? So this disclosure should be aligning with the principal outstanding towards the MSMEs. First, you have to check whether all the disclosures are tallying or not. First, you have to ensure that, right? Second, if there is no dispute with MSME and you are still showing the disclosure more than 1 to 2 years, 2 to 3 years, more than 3 years, then there could be a question from the government. Then why these dues are outstanding? These dues should not be outstanding because the maximum date is maximum period is 45 days, right? Then why these dues are outstanding? And if these dues are still outstanding, have you made an appropriate provision in the notes to appropriate provision in the books of accounts for the interest portion, right? Because if you have a default with MSME, you have to provide interest portion on the 3x of the bank rate, right? 3x of the bank rate, right? So you have to see from that perspective as if it is with the other than MSME, and if it is other than MSME and still you are not paying, then why you are not paying? Is it something due to cash crunch you are not paying? Second, or whether these liabilities are fake liabilities, whether these liabilities are just you have created a provision. For example, you have created an expense and you have created a liability so that you will reverse these liabilities after 3 years. Why you're not paying off these liabilities if there is no dispute? So being an auditor, being a management, you have to be much more cautious while auditing these kind of disclosure and while making these kind of disclosures. So my dear friends, आंखें खुली आप लोगों की या नहीं खुली? Whether your eyes are open or not, these are not simple disclosure, I would say. What would you say? So what would you say? No one is saying anything. Whether you're listening or not listening, are you enjoying the session or not enjoying the session? Yes, good. Good. So you have to do a lot of work while these disclosures, right? So I have given a disclosure of TVS Motors Limited, right? So that you will have a practical aspect of it. And when you look at the TVS Motors disclosure, so as far as MSME is concerned, you can see that this 56.85 is something which is not due, but otherwise there is no dues with the MSME. There is no disputed with the MSME, right? So nothing which comes under the category of due, right? So now coming to the trade receivables. Now, what is meant by trade receivables? A company has sold goods on credit, and a company has sold its one of the factory building on credit. Now tell me whether both of these transactions will be covered under trade receivable, or one is trade receivable and the other is other receivable. What is your view on this? What is your view on this? Selling goods on credit is a trade receivable, but selling property on credit is a other receivable, right? Is a other receivable. Is it clear? Yeah. So now, earlier there was a requirement in division 1 to schedule 3 that the trade receivable has to be shown as a aging. The trade receivable has to be shown up to 6 months and more than 6 months. Second, the trade receivable has to be shown as a good and doubtful, right? Secured, unsecured, good and doubtful. Now the government has asked the aging of trade receivable as, right? And government has asked that you have to provide an aging of trade receivable from due date of payment, from where the right to receive payment has been established, right? And in the trade payable, the aging was starting from less than 1 year, 1 to 2, 2 to 3, more than 3. In trade receivable, the aging starts from up to 6 months, right? Then after up to 6 months, it is 6 months to 1 year. Then it is 1 to 2 year, and then it is 2 to 3 year and more than 3 years, right? And there is a total of it. Now again, the question comes, what is the due date of payment? First, if it has been agreed with the customer, that agreed date. If it has not been agreed, then date of transaction. What is the date of transaction? When you sell the goods and the goods or services have been accepted, right? When you sold the goods and the goods and services have been accepted by the customer, then it is known as a date of transaction, right? Now the question arises under division 1. What is the breakup in which this disclosure is required? The breakup is trade receivable considered good, trade receivable considered doubtful. First, good and doubtful. And this good and doubtful has to be broken into 2 parts, disputed and undisputed. As simple as that. Disputed and undisputed, right? Disputed, undisputed. Clear? Is it clear to everyone? Any doubt? Any question here? Any question so far? Thanks. I would say you are a learned audience. How do we determine disputed? Very good question. How did you determine disputed? आप disputed को कैसे determine करोगे? Now tell me whether the definition of disputed is given anywhere. Whether the definition of disputed is given anywhere? Answer is no. The definition of disputed is not given in accounting standard. The definition of disputed is not given in the Companies Act. But you have to refer the definition of dispute, which is given under section 5, subsection 6 of IBC, Insolvency and Bankruptcy Code 2016. And it says that dispute means, the proceedings related to suit or arbitration. If you have raised a suit or you have raised an arbitration relating to the existence of the data, you are saying, no, I am not required to pay anything, or due to breach of warranty, or due to quality of goods and services. So nutshell में अगर सामने वाली पार्टी ने कोई, एक तो हो गया कि उसने dispute raise किया कैसे, by reaching to the court or by reaching to the authorities. दूसरा, आपको letter लिख के उसने dispute raise कर दिया, then again it will be considered as a dispute, right? Now my question to you is, for example, your client has sold goods on credit to a company, and that company went into NCLT. That company was a very good company. That company has always given the money on time. and now your client has to receive a money of, let's say, under trade receivable, your client has to receive a money of 50 crores, and the customer, that customer went to NCLT. तो मुझे ये बताइए, आपका ये जो क्लाइंट है, ये इस ट्रेड रिसीवेबल को कौन सी कैटेगरी में दिखाएगा? इज इट गुड और इज इट डाउटफुल? इज इट गुड और डाउटफुल? अब वो कस्टमर एनसीएलटी में चला गया. Yes, it is doubtful, but is it disputed or undisputed? Is it disputed or undisputed? Yes, very good. It is undisputed, right? Because that client has never raised any dispute. Under division 2 to schedule 3, IND AS schedule 3, under IND AS schedule 3, the word is considered good. Second one is your under considered good, secured, unsecured, then significant increase in credit risk and credit impaired, right? So you have to show that disputed and undisputed in these three categories. Disputed considered good, undisputed considered good, right? Second, disputed, significant change in credit risk, undisputed, significant change in credit risk. Disputed, credit impaired, undisputed, credit impaired. So for example, when this customer went to NCLT, it become credit impaired, but it is undisputed, right? Clear? I hope with this disclosure of Tata Steel, this is more clear. I have given the disclosure after every new requirement as well, right? So now coming to the additional regulatory information with respect to immovable properties. And this requirement is there in CARO also. And amended schedule 3 says that if the company has any property, plant and equipment, investment property, right, which is there in the balance sheet of the company, there in the books of the company, in that case, the company has to disclose those items where title deed are not held in the name of the company, right? And what kind of disclosure is required? Relevant line item in the balance sheet. So those properties are sitting in PP or investment property, first of all that. Second, description of item of property. Is it land, is it building, or is it land and building? Third, what is the gross carrying value? Gross carrying value, it means gross block. Fourth, if the title deed is not held in the name of the company, the title deed is held in the name of whom? You have to require to disclose. Fifth, whether title holder, title deed holder, first you have given the name, now you have to say what is the relation. The title deed holder is a promoter, director, or relative of a promoter or director, or employee of promoter or director, right? You must have seen in the raids which are happening in the bureaucrats or politician house. So you must have heard that कि बहुत सारी properties नौकरों के नाम पे होती है, servants के नाम पे होती है, gardener के नाम पे होती है, right? And these disclosure is given in this para as well. Property held since which date? कब से property उसके नाम पे है? Reason for not being held in the name of the company. Company के नाम पे क्यों नहीं वो भी बताना है. I am showing you the disclosure of Tata Steel Limited so that you would be practically able to understand this disclosure. First of all, description of the property. So when I say description of property, freehold land, building, freehold land, building. So it has given, it has classified into two parts. First, the gross carrying value is given for the current year, for the previous year, for the current year, for the previous year. Held in the name of the company, not applicable. Why? Whether promoter, director, relative, no. Period held from March 1928, right? And reason for not being held in the name of the company, title deeds are not available with the company. So when I talk about Tata Steel, probably in Jamshedpur, right? So these properties are in the possession of this company since 1928, and they don't have any document, and they have disclosed this fact that yes, we don't have any title deed, and we don't know where it is with whom, right? But it is not with us, right? Second, they have given, yes, these are the freehold land and building, which is with the Bhushan Steel Limited, Bhushan Steel and Strips Limited, and Tata SSL Limited. So recently, Tata Steel has acquired Bhushan Steel. So they have given the disclosure. Yes, these companies are not the promoter, director, or relative of those companies. These are the dates. And why? Because for certain properties acquired, through amalgamation or merger, the name change in the name of the company is pending. So they are in the process of getting the name change. By way of acquisition of the company, these properties have come to Tata Steel. Understood? I hope you are clear with this disclosure. Yeah. The next important disclosure, CWIP. And I would say very important disclosure. And when I'm saying CWIP, I'm talking about tangible item CWIP as well as intangible item CWIP, right? When I talk about tangible item CWIP, I'm talking about capital work in progress. When I'm talking about intangible item CWIP, I'm talking about intangible asset under development, right? So earlier, only the CWIP disclosure was required in the balance sheet. And by virtue of accounting standard, the reconciliation of CWIP was required in the notes to accounts. Opening CWIP, added during the period, utilized during the period, and closing during the period, right? Now the government has asked, please give me the aging of the CWIP, right? For the projects in progress, what is the aging of the CWIP? Less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. What is the aging of these CWIPs? Starting from just like trade payable up to 1 year to more than 3 years, right? Which are the projects which have been temporarily suspended, right? And you are also required to disclose. You are also required to disclose that in case the completion is overdue, right? So you have thought that, or you have budgeted that this project will be completed by in let's say 2 years, but it has been overdue in terms of period and in terms of cost. You are also required to show the disclosure of those overdue in terms of time and in terms of cost. You are required to disclose those things, right? What could be achieved by having the aging of CWIP? Tell me. Probably if I would be the regulator, probably what thing which came into my mind, because your accounting standard says that, or your income tax act says that, when the asset, accounting standard says that when the asset will be available for use, it will be capitalized, right? When the asset will be available for use, the depreciation will start. And income tax act says that when it will be put to use, depreciation will start. So probably if the aging of the CWIP is, let's say 3 years, more than 3 years, then why these projects are not getting completed? Is it due to the lack of money, or is it due to the lack of intent, or is it something where the company don't want to capitalize right now? Why? Because if the company will capitalize, then depreciation will start, right? So the discussion or mindset could be in any angle, but as an auditor and as in management, you have to be ready with the answers, with the responses, which can be raised by the regulators or auditor as well. Khushbu has very rightly asked one thing. In many small companies, we would not find a plan that can be compared to overdue or not. Khushbu, let me tell you, yes, you are right. In small companies, even I would say that a lot of things are not, you will not be able to find a lot of things. And even it is the auditor who is preparing the financial statement, I'm telling you, but the time has gone. Now the onus has been shifted to auditor as well as management. Now you have to say your client that if there is any capital work in progress, you are installing any factory, you have to have a budget for that. Every company is having, even if a Lala, when I say Lala, I am talking about a small company, private limited company, where the independent board is not there. Even that person has the हिसाब of budget कि मुझे अगर फैक्ट्री खोलनी है, फैक्ट्री लगानी है, तो मुझे 100 करोड़ लगाना है, 50 करोड़ लगाना है, और कितने टाइम में लगाना है. He has a value and he has a budget for every single penny he is spending every day, right? So I think we have to put some pressure to bring that plan on a paper, right? I think we have to do that. Yes, it is important and it is necessary, I would say. Coming to the practical aspect of it, I have taken a disclosure from the Hindustan Unilever Limited, where you can say that this company has given an aging of project in progress and project suspended, right? The total is 1313, right? And where the projects have exceeded original timeline, it is 473 crores of amount, and where the project have exceeded the budget, it is only 2 crores, right? And relating to 473 crores, where the project have exceeded a timeline, the breakup is given under progress: Kolkata factory, Assam factory, Kandla, Rajamundry, Khamagaon, Gandhidham factory, right? So this entire breakup is given, right? So this is for the last year, this is for the current. This is for the earlier was for the last year, and this is for the current year, and this is for the last year, right? Where project is suspended as an auditor, do we need to check for impairment? Of course, yes. Of course, yes. It is a indicator of impairment, I would say, right? Then you need to, even you have to take a confirmation in LOR that why this should not be suspended. Okay. Then I am moving to the important disclosure, which relations with the stock of companies, right? So last week, I was taking an interview for a senior manager profile in my company, right? And I've asked the candidate that which disclosure were not applicable to your company as far as revised schedule 3 is concerned. He told me that the relationship with the stock of company was not applicable. I said, why? He said, nahi, hamari company pe applicable nahi hai. But I told him, how you have concluded? I asked him, how you have concluded ki this is not applicable to your company? He said, this is not applicable. I would say this disclosure is applicable to every company. You have to see whether in your portfolio stock of company is there or not. Right. So guys, as per section 248 of the Companies Act 2013 or section 560 of the Companies Act 1956, the companies are getting struck off from the register of MCA. Right. For example, you all are chartered accountant, you are paying your membership fee. You are paying your membership fee. If you will not pay membership fee, what will happen? Khushbu, I hope I have answered your query. I hope you have got the satisfactory answer, or let me know if you have still some doubt. I would be happy to respond. Yeah. So my question was, if you will not pay membership fee, what will happen? Your name will be strike off from the register of ICAI, from the membership register, right, Mr. Vishwanathan? Likewise, if the company will not pay, will not file annual return for a certain period of time, the name of the company will be struck off from the register of the company, and government wants to see that. And Ministry of Corporate Affairs regularly notifies the list of struck off companies, and government wants to see that how much struck off companies are operative as of now. So your name has been struck off from the register of the company, but still being a chartered accountant, you are enjoying your CA practice, or the people who are in employment, they're enjoying their employment, and government wants to see that. I'm just giving an example with the help of this CA thing, right? So now the revised requirement is, the disclosure requirement is, if a company has been struck off, then the name of the struck off company is required to be disclosed. And the nature of the transaction with the struck off company is required to be disclosed. The nature of the transaction with the struck off company is required to be disclosed, right? When I say nature of transaction, if the struck off company is a shareholder, it means holding share in your company, you are required to disclose. If you have sold goods to credit, goods on credit to the your customer who is a struck off company, you are required to disclose. If you are taking a goods from the struck off company as a vendor, you are required to disclose, right? So you are required to disclose if there is any relationship with the struck off companies in terms of any transaction. You are required to disclose the relationship, nature of transaction, name of struck off company, and balance outstanding. And the balance outstanding. Yes, Khushbu, you have a very good point. And this issue I have faced practically in my company as well. Let me tell you, there are a lot of vendors as of now. Big Four is having a complete compiled list on an Excel file. So we have approached to Big Four, because Big Four is our auditor, and we have approached to them also that please provide us a complete list of struck off companies, or some vendors are there who is doing this kind of assignment, and you will just give the list of vendors to them and they will tell you that which vendors are the struck off companies, right? So in MCA portal, it is not The complete list is not there. In bits and pieces, the various notifications are there. Yes, Parikshit, this is applicable only if the balance is outstanding. But let me tell you, some companies are having the transaction with the stock of companies. They are also disclosing as a part of good corporate governance, for example, Infosys Limited, right? So in this example, I have given the disclosure of Tata Steel, and you can see that the name of the stock of companies, right? And they have given other entities who are the shareholder, right? So these are the balance in the current year, last year, and the relationship: customer, vendor, advance to vendor, and equity shareholder. And this is a list of the equity shareholder, right? So this was there. Coming to the last important disclosure. So Mr. Parikshit, I hope I have answered your query. Khushbu madam, I hope I have answered your query. The last and a very important disclosure which I need to discuss is key ratios, right? As an auditor, you need to comment that whether the company will be able to pay off its liabilities, whether the company will be able to continue as a going concern, but how you will ascertain that. So now there are 11 ratios which is required to be disclosed, right? Current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment. If you look at these ratios talks about the profitability. These ratios talks about the solvency. These ratios talks about the working capital management, right? So these ratios are required to be disclosed for the current year and for the comparative year by the company. And the numerator and denominator is also required to be disclosed. What you have taken as a numerator and what you have taken as a denominator. And if there is a movement of more than 25%, if there is a movement of more than 25%, if there is a movement of more than 25%, in that case, you are required to disclose the nature why there is a movement of more than 25%. If I'm talking about more than 25%, I'm talking about even positive 25% as well as negative 25%. So I have given the disclosure of Infosys Limited, and if you see the disclosure, right? If you see the disclosure here, so in this disclosure, the ratios are given. After that, the numerator is given, denominator is given, right? And then the ratios is given, and then the variance. If you see the variance here, 35% is there, and the company has given the reason that this 35% is due to revenue growth along with the higher efficiency and working capital improvement has resulted in improvement in the ratio. Now, Khushbu is asking, what is the simplest way of return on investment? Let me tell you, return on investment means what you have earned on investment, right? First of all, for example, you have mutual fund. So for example, you have received a dividend, or let's say mark to market gain, or let's say profit on sale of mutual fund, right? 100 rupees. Now, so income generated from investment will the numerator. Now, time weighted average investment. For example, you have an investment for 6 months, right? You have a investment for 6 months, and in 6 months you have generated a gain of, let's say, 20%. Then what is the annual XIRR? If you have received a return on investment of 20% within 6 months, then what is the annual return? It would be close to 40%. So the simplest way to finalize the return on investment is income generated from investment divided by time weighted average investment. Divided by time weighted average investment, right? I hope it is clear to all of you. Yeah, I hope it is clear to all of you. Any doubt here? Khushbu, any doubt here? Coming to the P&L, in P&L, the separate disclosure, if no investment, no disclosure would be there, right? So if during the raid, during the assessment, if any undisclosed income has been found by the authorities, so such undisclosed income has been disclosed by way of notes to accounts by the management and by way of auditor's report by the auditor, right? For CSR, of course, with the amendment in CSR rules, if there are shortfall in the CSR, the shortfall has to be mentioned, and the reason for the shortfall is also required to be mentioned, right? Cryptocurrency, I'm not talking about. It is not applicable. What would I say? It is not applicable practically, right? I will not be talking about this cryptocurrency. Caro, I am not taking. This session was on schedule 3, right? And this is your favorite slide. This is thank you slide. And recently I have authored a book, treatise on schedule 3, just last month, on schedule 3 and Caro 2020. This covers the complete coverage on division 1, division 2, and division 3, right? Thank you so much. Now I am handing over to the organizers of this course, and if you have any query, then you can ask the query. I would be happy to answer. Mr. Nilesh or organizing committee, I have completed my session. So regarding the loan related disclosure, let me tell you, if a company has given a loan to the related parties, for example, director, promoter, relative, or the related party companies, either on the basis of either where no terms have been defined, there is no terms with that, or on the basis of, let's say, demand loan. For example, the company can ask the loan at any point of time. It is on a demand basis, right? So for that kind of loan, of course, for that kind of loan, disclosure is required to given as per the amended requirement to schedule 3, right? And let me tell you what is the disclosure for that. Let me show you the disclosure as well quickly. Let me know if this PPT is visible to all of you. I can show you that disclosure as well. Yes, loans or advances granted to promoter, director, KMPs, and the related parties. And this is also in the Caro, right? So the following disclosure shall be made where loans and advances in the nature of loans are granted to these related parties, including promoter and director, right? And which is repayable on demand, right? Or without specifying any terms or period or repayment. And what is the disclosure? First of all, you need to give the type of borrower. Is it promoter, director, KMPs, or related parties, right? Then amount of loans or advance in the nature of loans and outstanding will be there. And then the percentage, first of all, amount outstanding, it means closing balance. And then the percentage of these categories out of the total balance, right? So this is the disclosure which is required. I hope it is clear to you, Khushbu. I hope it is clear to all of you. So my number is 999991543. If you have any query, so we can discuss on the call also. You can WhatsApp me your query. I will be answering on through WhatsApp, or I would call you, but this is my number. I hope you found this session very informative and useful. So I'm handing over to the managing committee of WIRC of ICI. If you are there on this session, then you can start the proceeding or you can conclude the session. I am done. Thank you, Mr. Bhushan.
Thank you so much, Dr. Sir Alok Sir. It was a very informative session, and we have really got a good amount of knowledge from you. Thank you so much.
Thank you, madam. Thank you. Thank you, everyone. Stay safe, stay happy. Bye-bye.
Thank
Take
you.
care.
Yeah.